In a conference call that Snowflake management held with Wall Street investors on May 24th, there was huge news for Snowflake stock investors that you're not going to want to miss. I'm going to get into the details of that news in this video, so let's get right into it. Starting with what the management said for Snowflake. In a few of our large customers, with them just wanting to really change their storage retention policies. Like one customer went from a 5 year to 3 year, and it's a massive petabytes of data. So let me elaborate on that. So typically customers have, or enterprises have, storage retention policies like we're going to keep all our data for 10 years or 7 years or 5 years or whatever it might be. What Snowflake is saying is that some of their largest customers have reduced their policy. So if they had a 5 year policy, they reduced that to 3 years. And so that's petabytes of data that's getting eliminated. And so Snowflake loses that storage revenue. That's huge news. That's less storage revenue, and that could have major implications for Snowflake stock investors. A little bit later in the conference call, there was a question from a Wall Street analyst asking, so why do people store their data for like a certain number of years? And do you think this reduction is permanent, like reducing your storage policy? Is that permanent, or is this a temporary thing? And Snowflake CEO jumps in to answer that question saying, no, I don't think that's permanent. Like I said, the CFOs are now very direct, hands on in their businesses. They're giving very direct guidance in terms of here's where you need to be. Excuse me. And sometimes the lowest hanging fruit is just cutting back on data costs. And if you're not aware, there's been recent macroeconomic slowdown, and CFOs in businesses are looking at areas where they can cut costs to improve profit margins. So it used to be where businesses were thinking about growth more aggressively. Now they're thinking about costs more intently. So the cost concern is prevailing at the moment because of the general sentiment that we're in. In 2020 and 2021, it was all about growth. It was growth at all costs, and the mentality was just let it rip. No matter what, let's just invest in growth, regardless of how much it costs. Let's just fuel our growth. Now, we're on the other side of the spectrum, and we will reconverge to the mean at some point here. So that's the good news for Snowflake stock investors is in 2020-21, we were at the other side of the spectrum where it was growth at all costs. And that was benefiting Snowflake, and its stock price hit all-time highs over $400 per share. Now we're all the way at the other end where it's so much focus on costs. And what the CEO is saying is that we'll meet at the midpoint at some point, right? We won't go back to that extreme where growth at all costs, and we won't be at this extreme where everyone is managing to reduce costs. We'll meet at the middle at some point. And meeting at the middle will be good news for Snowflake because right now it's suffering because we're at the other end where it's just cost focus. So that's the good news for Snowflake stock investors in the next I wouldn't say next quarter. In fact, management does not expect this to rebound next quarter, but over the next few quarters, as companies start to focus less on cutting costs and focus more on growing, they can return to a more average level of data spending and data policy and not be so focused on cutting costs. And that could be good news for Snowflake. But right now, the huge news is this changing of data policy at Snowflake's large customers. That's a big headwind for Snowflake right now. That could turn into a headwind, that could turn into a tailwind a couple of quarters from now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.